All right, today we're going to tackle a really big idea, one that's right at the heart of modern business and investing. It's called the double bottom line. It's this fascinating puzzle. How do you achieve financial success while also making a real positive impact on the world? So, let's dive in. And this right here is the core question. I mean, can a company really serve two masters? You've got profit on one shoulder and purpose on the other. Or is there always going to be a trade-off? Is one always going to win out? This is the central dilemma we're going to unpack. Okay, so what is the double bottom line exactly? Well, it's not just some catchy phrase. It's an actual framework. Think about it. Normally, we only look at financial profit, right? That's the traditional single bottom line. This framework, it just adds a second one. It says, hey, let's also measure our positive social and environmental impact. Now, here's the thing. It's not a simple yes or no situation. It's not that black and white. It's definitely not about just picking one bottom line and ignoring the other. In the real world, investors and companies are working across a whole spectrum. They're constantly doing this balancing act, weighing financial returns against social impact. So if you picture this spectrum, it's got two main ends. On one side, you've got the finance-first approach. Now, don't get me wrong, these folks absolutely want to do good, but they're also looking for market rate, competitive financial returns. Then, way over on the other side, you have the impact-first investors. And for them, the calculation is different. They are willing to take a lower financial return, sometimes a lot lower, because their number one goal is to max out that social or environmental impact. Okay, let's make this trade-off a bit more tangible. Let's really ground it. So picture a company that provides clean water solutions. Now, they have a choice. They could sell their systems to wealthy neighborhoods and make a really nice profit, or they could sell them to lower-income communities at a much, much lower price. See the dilemma? Doing that would boost their social impact through the roof, but it would also take a big bite out of their profitability. That right there is the double bottom line dilemma in action. So when you see a real-world example like that, it really makes you think, doesn't it? If you're constantly stuck in this tug of war between profit and purpose, how do you navigate it? What tools do you actually have to strike a balance? Because it's not about just crossing your fingers and hoping for the best. And thankfully, there are very deliberate strategies for navigating this tricky landscape. So let's look at two of the most important ones. Okay, first up, we have this really powerful concept called blended finance. Now, I know it sounds a little technical, but the idea behind it is actually pretty simple and kind of elegant. It's all about being creative in how you structure an investment so you can pull in different kinds of money for the very same project. So here's how it works, basically in 3 steps. First, you bring in what's called concessional capital. Just think of this as grants from foundations or maybe super low-interest loans from development agencies. Step 2, and this is the magic part, that initial pot of money is used to absorb the biggest chunk of the risk. It acts like a financial cushion or a shock absorber. And then, step 3, because that riskiest part is now covered, the whole project suddenly looks way more appealing to traditional private investors. They can now come in and feel much safer about getting those market rate returns they're looking for. But, managing the financial side is really only half the battle here. If you're going to accept a lower financial return, or frankly, even just justify your mission to your board, you have to prove you're getting something super valuable in return. And that brings us to our second really crucial tool. And here's the bottom line on this one. You have to measure your impact. It is not enough to just feel like you're doing good work. You've got to quantify it. You need to know the hard numbers. How many people got access to clean energy? How many jobs were created? Once you have that solid data, you can put it on the scale. That data basically becomes the currency of your second bottom line. And that's what allows you to go to your stakeholders and say, with total transparency, look, here's why we made that financial trade-off, and here's why it was absolutely worth it. Okay, so we've talked about the spectrum from finance first to impact first, and we've looked at a couple of key tools like blended finance and measurement. Let's just pull back for a second and look at the bigger picture. What does it really take for this whole double bottom line thing to work in the long run? Ultimately, it seems to boil down to these 3 key things. First, alignment. Everyone involved, the company, the impact investors, the financial investors, everybody. They all have to be on the exact same page with their expectations from day one. That's non-negotiable. Second, you need radical transparency, not just in the financials, but in the impact reporting too. And third, everyone has to share a long-term vision. This is not a game for quick wins, it's a marathon. And that brings us right back to that big question we started with. The most sophisticated thinking on this topic today suggests that the whole goal isn't to make a choice, profit or purpose. That's a false choice. It's a false dichotomy. So I'll leave you with this final thought to chew on. What if the real goal isn't about choosing one bottom line over the other? What if the real challenge, the real opportunity, is the hard, creative work of aligning them? Finding that sweet spot where making money and doing good don't just happen to exist side by side, but where they actually fuel each other, where one makes the other stronger. Now what would that world look like?